Hey everybody, hey traders, Chris Pulver here with another installment, another module in my Keep It Seriously Simple training videos. Now, support and resistance will be the topic of today's discussion, and here's why it's important. Support and resistance for me has laid the foundation for me to buy low and sell high. If we can identify structure in the market where we see floors and ceilings to buy low and sell high, there is a probability around those areas where price behaves. So this is what we're going to do in the video. We're going to talk about this. I'm going to draw it out on the whiteboard here, and then we're going to go into some charts and show some examples. So I want to be a trader that can buy low with a little risk, sell high with a little risk, and a lot of reward. The best place to do that is using support and resistance. Okay, so let's get right to it on the dry erase board. Let's take a look. Now, we're just going to use some horizontal levels first. In theory, once we identify resistance and support, it usually takes, for us to trade this area, it usually takes a couple of touches. That's usually the third touch is where we can trade. And here's why. If the market is falling, comes down here and establishes a low, unless we're actually guessing at these lows or trading some type of price pattern and bottoming formation, this is just falling, falling, falling. We're hopefully continuing with some type of move that we saw a price pattern up here. We're trading this trend to the downside. Most likely this stopping point is not random. This stopping point is very likely, if you go left on your chart, is some other significant level of either past resistance or past support. But price is going to bounce and behave off of that somewhere. So if we have this touch, that's going to be point number one. Now from there, again, we're not in the trade yet. Obviously, if we're looking left and we see past support and resistance, we may be able to take that trade. But I'm talking about identifying this structure. So we go from this swing down to point one. And again, it doesn't matter what instrument we're looking at. If this is Forex, stocks, futures, cryptocurrencies, price action, price behavior is the same. Cryptocurrencies and Forex are 24-hour markets. Stock feeds and equities feeds, you have pre and post market, right? But for the most part, we're looking at structure every single day, and it doesn't matter what time frame. This is true. I mean, we can see probabilities and we can see repetition on support and resistance in any financial instrument. All right, so if we have touch number one, from there, price moves up. So we identify this as a low, and therefore this becomes a potential level of future support. So we're going to note that low. Once we establish a pullback, now let's just ignore this swing for a second. I mean, some of you might be looking at this and say, well, if this is a swing from high to low, what about Fibonacci's? What about pullbacks? Fine, you can do all that stuff, but I'm not worried about that right now. I just want to see what happens here. If we have this low and this high, again, where do we trade it from? If I have two established points where I have support, I have resistance. Well, right here, if we know that we are going back down to possibly challenge these lows, if we're taking this bigger swing into consideration, this might be high, low, lower high, we might be able to take the trade as early as point number two once we establish more of a topping formation or a trend line break, we're going back down. If we're looking to sell, okay, we can sell this area, get some confirmation, get some rejections, indecision candles. We can sell it back down, stop loss above, try to take this down to point number three. Now for us to trade structure, for us to trade support and resistance, it's point number three that I'm looking to buy. It's point number three that I'm anticipating to buy low. All right, so trade number two takes a little bit more of a savvy eye to sell that, to go back down and continue with this previous swing. So hypothetically, I'll go ahead and put this in blue. We'll say hypothetically, this might be the first trade that we take. Somewhere up here with confirmation, we take this trade. My marker's not working, I'll use green. We'll take this trade to the downside. Okay, now that's hypothetical. If we get that trade, great. You're early to the structure and you're using previous price action to take that sell trade. Now, I said it's point number three that I'm looking to trade because now I have some established structure. Now I have something where if this low holds, this low is going to hold as well. So if we hold support and we have another level of support right here, we have risk, which is very limited, right? We're looking at risk that's not that big for our reward that is looking to run up to an established point, right? So we're looking at this type of reward. A lot of times in certain support resistance levels, we're talking about at least 2 to 1. At least 2 to 1. All right, so if you do the math, I mean, 2-to-1 trading is going to make you a profitable trader. Taking that with a high probability makes it even better. 3-to-1, 4-to-1, even better. You have to, win less trades to still make money. So having a decent winning percentage plus a huge reward to risk, you're going to be a profitable trader. So we're looking for trades with limited downside. The whole point to trading support is to identify that structure wants to react again. Now, yes, you're going to see that maybe there's a spike to this level. Maybe there's an indecision candle down here and a spike back up. We might have a close below, indecision, close above. That's what we're looking for. Okay? We're either looking for indecision. Let me go ahead and delete this or erase this. We're looking for indecision around this support zone. Okay? So we want to see candles that look something like this. It comes down and tests the lows, but it closes higher. It comes down and forms any long wicks that we see to the north or south. That's a great sign for support to hold. All right? The only time that I'm really looking for this to be invalidated is if we are closing back below this low. So we need the body of a candlestick to close lower. So that means if we have a wick here, the body of the candle is closing below this previous support. And that would probably mean more continuation to the downside. Look left on your chart. You're probably going to have another level of support and resistance to go after. And again, if we're selling up here, we're still running with this trade. We're looking for confirmation down here. A candlestick closing below is not confirmation to buy. Okay? So what we want to see instead is we're looking for rejections. We're looking for indecision. That is a great sign for us to buy low. So if we have a 1-hour chart that shows a lot of indecision, if we have a 4-hour chart that shows a lot of indecision, my favorite is, and most traders don't have the patience for this. Most traders don't have the patience to wait an entire day. A daily candlestick. So and this is what happens, you could have a 1-hour chart here, a 1-hour chart here. This could be, multiple candles to the downside. And then by the end of the day, price pushes back up and closes back into this range. And so the traders on the smaller time frames are duped into selling into these lows, and meanwhile price is getting pushed back up. Well, if you zoom in here, okay, let's say that we're going to zoom in, we have 1 hour. Let's say this is our support. 1 hour's below, another hour's below, and then we have indecision, then we have bullish, then we have bullish, okay? If we're closing here, if you zoom in, this daily candle might look something just like this. What do you think the daily candle is going to look like? It's going to look something like this. Right? Support, we came down, we tested those lows, we closed higher. This long wick to the south at a support level is a great indecision candle. In fact, this might even be interpreted as bullish price action. And I would say from this bullish price action, the next day or two, we're either going to come back down and retest and fail to take out that low, and we're going to go the way of that formation, or a lot of times we might see that type of formation just simply starts off with bullishness, and that's where we get this trade to the upside. And that's why point number 3 is where I'm interested in buying from in this example, right? And then if we have another established move, if we're going to the upside, we're buying low, anywhere in between, right? We don't have, it's ideally we want to hold on to the trade, and we want to be these perfect textbook traders. But as I like to say, I'm trading to be profitable, not trading to be perfect, right? You're not going to go broke taking profits. And if we have a trade here with limited downside and we're in profit, if it goes higher, all of this is generosity, right? All that is extra cash, extra profit. We're letting our profits run as we should, right? We're trying to let our profits run. We're trying to reduce our risk, eliminate our risk as quickly as possible, letting our profits run. So if this, let's say this point here is a 2-to-1. Let's say anything higher than that. Now we're at 2.5. Now we're at 3.0. Now we're at 4.0. Anything there as far as the surplus goes, our reward is greater than our risk. Okay, so let's fast forward here. Let's say that we got the trade we wanted. We see the indecision. We see the confirmation of the upside. We take that buy low opportunity. What's next? We have established lows. Okay, this is point number 3. We have established highs. What are we looking for here? We're buying and protecting our profits on the way up. We're looking for an anticipated 4th point. So as this is making its way up to the top, this is where it gets a little bit trickier. Again, because traders are starting to identify the highs and lows. It's not that difficult to spot structure in the market. In fact, liquidity providers and brokers and institutions love these levels because every trader that's trying to sell it up here, they have their stop losses right there. So it's easy for price to spike up and test those highs and spike up above those highs, take out every trader that's trading way too small, too small at time frames or too big a trade size that can't sit on any type of risk. So instead, they spike them up here. They still show rejections. They still show indecision. They don't really invalidate the resistance. And traders get stopped out here, and then price still returns into the range. This becomes a spot where we can sell high again, very limited risk, go after a midpoint of the channel, go after the full shebang of profits, but we're going after a big reward to risk. All right, so, again, I'm drawing this in theory, but we're going to see this on the charts here momentarily. But I want us to get in the habit of identifying levels that we can buy and sell from.
You might want to go ahead and pause the video and take a screenshot of this. These are indecision candles that we're going to look for at support and resistance levels. When we see these at support levels, we're looking to buy. When we see these at resistance levels, we're looking to sell. So these are really common but very powerful candlestick formations that we can look to identify tops and bottoms, and therefore trade support and trade resistance.